Order flow, order flow, order flow. You've heard a lot about order flow in futures trading, maybe not even from me, maybe from other traders. It's the pinnacle of futures trading. It's not, right? It is, it isn't. I've made a lot of videos, countless videos on order flow, specifically around the DOM, the footprint, delta, right? Order flow aspects of trading. And I've even made a counter argument, right? I've made an argument against order flow in one of the most recent videos that we've posted. So today what I'm going to be breaking down is I'm going to show you that although I do use order flow, I like order flow a lot. It is a great tool to help me understand where market buying and selling actually is, where imbalances are in the market. Although that is the case, I'm going to show you that it is completely okay to trade without order flow, and I'm going to be breaking down how to actually trade futures without order flow today. Now, at the end of the video, I'm going to make this video a little redundant. I'm going to throw in a little spice of order flow to kind of help you understand how this trading strategy or system setup can be used with order flow as well. But the main focus of today's video is just completely abandoning order flow, especially if you've had a lot of trouble trying to read the DOM, trying to read whatever order flow piece of information out there before. If you've had a lot of trouble with that, this video is most likely for you. You might think, oh my God, I can't be a trader. I have to go and trade some other strategy, something very basic that doesn't have a high probability. Well, that's not the case. You can easily trade futures without order flow. I know a lot of traders that just trade with these two charts that we're going to be using today, and they surround themselves by volume profiles. So we're going to be breaking down volume profiles more, right? You've seen probably a billion videos on our channel about that, but that's going to be our main piece of information to trade 100% without order flow. So let's get to the screens after this intro. Don't forget to hit that like button, that subscribe button, and sit back and enjoy. What is up, traders? Like I said, I'm going to show you guys a way that you can just completely even abandon order flow. Maybe it's just a little too much. Maybe you're just not catching on to the order flow. Maybe it's too complicated. It's not a necessity to actively and trade futures well. I do know a lot of traders that don't actually even trade with order flow, and they do really, really well. And what I'm going to be breaking down is pretty much auction theory that we've made an overall encompassing video of it, but I'm just going to show you two charts that don't even have candles on them to help you identify how you can trade without order flow, and this is based on just volume profiles. So if I have a good understanding of volume profiles, I don't necessarily need to trade with order flow. So why is that? Order flow is pretty much another volume metric realistically, because you see how many buyers versus sellers are coming into this market. Now, if I have a very good understanding on the whole overall encompassing basis of volume, I don't necessarily need that, because this volume analysis based on volume profiles will give me an understanding of where there's heavy buying, heavy selling, thin volume, thick volume, and everything in between, right? So I can just use these simplified charts instead of kind of gearing towards order flow to give me a better understanding of what's going on. Now, towards the end of this video, I am going to bring in a small concept of order flow that isn't complicated at all. You might have heard of it, delta profiles, which kind of makes, puts a little redundancy in this video, or it puts a little kind of, I guess, less meaning to this video. But if you watch it through and through and you understand how to break down what's going on based on volume analysis, you don't necessarily need order flow to trade. Now, some of the things that you do need to understand is that with volume analysis, generally, I won't be able to pinpoint my trade entries that precisely, and I'll need much wider stops that are based on some of the auctions. So my stops are going to be a little more fluid without order flow, meaning that with order flow, for example, I can use a 3 to 4 point stop on the S&P 500 futures. I can use a 15 to 20 point stop on the NASDAQ using order flow. Now, if I'm looking at what's going on with the profiles as well as just general volume analysis, I might have to extend those stops to potentially even around like 6 to 10 points on the ES, maybe 30 to 40 points on the NASDAQ, And with that, I'm looking for very, very big moves. So pretty much what I'm going to be breaking down is a volume analysis based strategy to give you an understanding of what the directional anticipation of this market looks like and what kind of trades to take from this market, right? So that you're looking at this from a larger scale realistically. So when I'm looking at these volume profiles, on the left-hand side, I have a weekly profile. On the right-hand side, I've got a daily profile. Both of these profiles have a 200-day cumulative volume profile in gray attached to it. So what I'm doing with this volume analysis is I'm trying to pinpoint where prices are balanced versus imbalanced and where the directional strength of the market is right now. So generally speaking, when we have the concept of balances and imbalances, these are areas that are a multitude of high volume nodes that are brought together that create this belly. This is what a balance looks like. You can have balances on the larger cumulative profile. You can have balances on the weekly session profiles like this, for example, or you can have balances on the individual day profiles, for example, like here, here, obviously here. And with that, you can get a lot of information in terms of how to actually read the trajectory of the market and understand where you want to trade from without the use and need of order flow realistically. So as I'm looking at this, I'm trying to identify where the overall market balances are. So these balances, the first thing I'm going to do is understand where the massive defined balances based on a 200-day profile are, right? So if I have a huge defined balance, the general thought process is prices, this is how prices move. They move from balance to balance and continuously, repetitively. And this cycle just repeats, repeats, repeats. There's going to be an area of imbalance in between naturally. And that area is caused by some kind of new news probably coming into the market, new information generally that allows prices to move into all-time highs or whatever the case is. So as I'm looking at these things, I'm trying to identify if I'm inside of a balance right now, right? And if so, where did the price come from to give me an understanding of what the expected move actually looks like? So if I'm looking at this balance, let's say we've got two balances like this grouped on top of each other, and we move into this balance from a lower price, and we're just rotating, holding within this balance. If I move in from a lower price into a balance and get acceptance, meaning closes and reopens inside of that balance, I'm bullish. I'm effectively looking to trade the bottom end of that balance for the continuation, right? If I do the same thing and on the day I make a move into another balance, it continues until I get a move back into a lower band balance where I can identify potentially a market session close to continue that momentum. So that's how I'm trying to play these out. Now, I'm going to be mainly looking at the large balances from the overall 200-day profile, right? And with that, I can then start moving into a weekly profile. It's something like multi-time frame analysis, realistically. Something like multi-time frame analysis here, where I'm looking at a very large view of the market. Then I can look at a weekly chart to identify where there's balances or imbalanced areas. And then I can take a look at a daily chart, which is my last piece of information to make sure that what I've got going on is good realistically. So if I'm looking at the larger profile here, I'm looking at these like very big monster balances. Why don't we focus here on the weekly chart because we're just going to transition to the weekly anyways. So I can see, okay, there's a very big balance. Now, what defines a balance is the aggressive drop off that sandwiches this larger bubbly area together, right? So that's what I'm mainly looking at. I'm mainly looking at if there's a region that creates this big belly and two extreme moves of that balance to sandwich this price. So this is going to be a massive balance for me. Now, I want to hunt prices as they come into that balance. If we get a balance acceptance like this of a very, very large area and we start closing, right? You get a weekly close into here, you get a weekly close into here. I am a buyer at the bottom band of this balance. If we say it's 57.40, for example, I am a buyer into these areas, right? And my stop realistically is probably the other side of, well, maybe not that deep, but like close to the other side of that balance. So I'm potentially using a 10 to 15 point stop on this. Now, obviously, if I look at the daily, maybe I can configure that a bit more. But realistically, I want to be a buyer into this area around 57.35 to 40, based on the bottom band extreme of this balance once we enter and we get some closes within. So my general thought process is that I have an area that might span, right, 3 to 5 points, and that's my general entry on the S&P 500. On the NASDAQ, it's going to be much more realistically. That's generally step number one, right? First things first, I want to identify where these balances are from a larger perspective on a 200-day profile, right? If I grab it like this, right, into this area, we have the bottom band somewhere over here. So between 35 and 40, and we have the top band somewhere around 58, 58.05, right? And then anything above that realistically is an all-time high, right? We start moving above these areas, especially above that 58, 40, 45, 50, whatever that area is, you got an all-time high. So when you get an all-time high movement, right, it's not necessarily too effective to look at these distributions because they'll continuously shape up. Instead, I'll be more focused on what's going on the individual weeks. So it plays the same role here, right? You have pretty much this kind of auction like here based on the balance from this week. And then you have another balance from this week that gets created into the high, right? They get cut off by these low volume areas. So theoretically, what I'm looking at here is, can we continuously accept into auctions to the upside on a larger view? The larger view I'm looking at is a 200-day profile as well as a weekly profile. When I put both of these together, I get an understanding of where the big balances are, and I'm just following along, right? Like a little puppy. I'm just following along where these balances are and continuously trading and trading them. So right now, if I'm using the prior week's balance from over here, right, between 58.50 and the top band is at 58.70, we can say, then realistically, what kills my long is if we start moving back under within this little makeshift balance from last week. So the rule that I follow is that if I'm inside of a balance, right, and we exit that balance and we move into a new balance, as long as that balance holds, right, and we don't get momentum and closures within the prior balance, I'm going to remain to the long side and try to continue that leg higher. It's the same concept if I'm looking for the short. If I'm looking at price and looking at them to try to fail, I have to start seeing the acceptance of balanced movement into the downside, meaning if I start getting closes down here, specifically down here, that's how I can play the short on this, right? So if I get a failed move through a balance, right? Let's say we get a move to the upside, but it fails up here somewhere and we come down, we close back within this area. At this point, I'm looking to play the directional move to the downside. So all I've been talking about so far is just direction. I'm trying to identify the direction based on these balances. So if I'm to review what I've looked for in terms of the direction for these balances, is that I'm trying to pinpoint the bottoms and the tops of these massive balanced regions based on the larger 200-day profile, right? And if I don't have that information, because we're trading at all-time highs, I lean on the weekly chart to identify where those balances are. Now, I can lean on the weekly chart on the intraday basis as well, to get an understanding of where the balance area on the larger scale is effective. For example, I look at this week. This week over here has a balance like this, right? It kind of sticks out of the top of the overall balance, but you have a balanced low area over here from this week itself. Now, I personally will take the larger profile over this individual week's profile and look at that perspective, right? Because, okay, we have a ledge balance over here. That's pretty important, I would say, right? But for me, I can trade, right, realistically over here, but there's a higher probability that there's something more active into this area. So I have both of these areas, but if I had to pick one out of these two, it's going to be the bottom band area over here. And I want to see how prices actually rotate down there. Because if I take a look at a full picture of what's going on here from prior weeks, when I'm looking at the weekly profile analysis, I'm looking at this from the perspective of where the weeks have yet to trade. So for example, like this week is brand new. Obviously, we haven't traded a new week. So all this information is going to be valid for me. If I look at this week, we've traded into this area. So everything below that, all these like little balances are going to be valid piece of information. So if I'm looking at this week over here, I have a balance like this, right? The bottom band of that balance is somewhere here where the volume drops off into that red coloring, and then the top band of the balance is over here. So this comes into confluence with the bottom band area of this larger profile balance, right? So this is the clean acceptance. If I'm looking at these individual sessions and profiles, the color is ranked in terms of a heat map. It's a heat map for volume. Red is going to be the lowest area of volume, and blue and green are going to be the highest areas of heaviness of volume. So where I see red meet blue and there's drop-offs, right? There's longer wicks. Those are the extremes of the balance that I'm looking at. So over here, we have the extreme of that balance. We have a balance area into this week at this high. We also have down here. So we get the acceptance of this week. We close above. So theoretically, this area, which is this week's low, is going to be a viable area for me to position on the long side because I want to follow along. I want to follow with what's going on, right? Another factor that we can take a look at is the opposite side here. I can trade the long side in the direction of this trend, but I can also trade the potential short side. So where does the short actually come into play here, right? From what we had just looked at. So we get a clean balance move, right, on this week up here. We get this move up, we close up, and we have a balance top over here, somewhere here like this. So if I get an excess move like this, but I fail to close this week up here, I know that this region right here has the potential to identify some kind of failure. So I can be playing the short from that area to look for the other side of the balance. Now, if I want to stay on trend and keep things alive, I'm going to be trading the bottom band of that balance right down here, trying to get that long. So if I'm looking at what's going on into all-time highs and I'm trying to decipher what has happened here, because we expand above the ledge of this balance. So we're now bullish, right? We get a nice confirmation weekly close above that area. This week leaves behind two smaller balanced regions. One of them, we can say the bottom band is close to this like high teens 20 and the top band is somewhere at like 50. And then the next one, which is much smaller, the bottom band is somewhere at 50 and the top band is somewhere at 70, right? So we get that closure there. So realistically, if I'm going to continue the momentum, right, I'm going to be looking for this bottom band of this auction to hold so we can get that sweep to the upside, right? So realistically, if we're trading up here somewhere, I would have liked to see this area, the top band of this balance, hold support structure. And then the final chance we have is down here. So if I get long over here, right, because I see maybe some rotation, some kind of action, I get stopped out. That's okay because the last chance that we have is somewhere into that 58.50 to get long, right? So we're still holding this balance alive. Now, if I were to start moving down into this balance, right, after all this creation of volume, I'd honestly be looking to sell rallies into the top band of that balance, right, with a final long, potentially a little savior long to see if we can get that pump from that area. Because right now, what's happening is that prices are solidifying, right? You can see very heavy volume, a block of heavy volume. The last 5 days, the profile from the last 5 days is also effective, right? So you can see that there's heavy volume creating a balance into this low right where last week's balance was trading. So if I'm just looking at this, I know, well, realistically, I want to be long. I want to be long into these areas. The extreme top and the extreme bottom should hold for that continuation to the upside swing. So if I'm looking at this, right, if I'm entering somewhere around 50, maybe 55, I'll probably have a 10-point stop that goes into this balance so that I can look for that projectile to the upside. And I'm looking at like 15 to 20-point trades on the lower band. Remember, I'm not using necessarily order flow, so my trades are longer, they're larger, the expected move is bigger. So that's what I'm trying to gear myself towards. So I can take this information and start relaying it to the individual sessions to get more of an understanding of what's going on session by session based on the overnight and the daily. So if I take the concepts that we have, what we've done so far is we've rallied this past week into a new auction area. So if I have the understanding of heavy volume, these heavy volume blocks, these are very big support structures. These heavy volume blocks, also light volume blocks, is what I call an unfinished auction because you have this very light area that extends a lot. Like it's like a wick, right? It's this P-shaped volume profile wick where like the bottom area is this like thin red volume block. So this thin red volume area over here, what it tells us is that there's a very strong push to the upside, a quick push that realistically, we're not necessarily that sure if the volume and the buying is super strong on this because it just leaves this balance into the high of it, meaning the bottom band of that balance is my expected support structure to try to continue the longs. So if I'm looking at this from a big perspective as well as the individual perspective, so like we have the larger profile before we rally above, and then we start our new profiles based on what we had talked about over here, right? We have the 0, or sorry, the 20 area is going to be the bottom band, and then the top band is going to be around this 50, right? So this 50 area over here, right, which is the bottom band of this profile, is the start of the low volume that we have over here. So this balance over here that was created on this day, this was Friday, if I'm not mistaken, this balance that was created on this day, this is a detrimental support to continue our rally, which also coincides with this area over here. So we want to continue the rally from that area. Now on this day, on this individual day, we have again a very similar format. So if I'm looking at this, right, I want to look to see if I can position on the long side. If I can position on the long side from that area, we have the expectation for a continuation. Now let's say I don't have any confirmation. I'm just kind of getting into these trades, right? I'm getting into these trades based on volume, nothing really else. So what would happen in this position when we have this drop off in volume is that I'd get long and then I'd get stopped out on this, right? That's fine. So the other factor is that we start sneaking into this new volume area. So I have the potential to trade the bottom band, which is my long idea, right? Or if we start sneaking into it, I can look to sell into it. Now, both of these concepts work, but generally speaking, when we move into this balance, this is where I want to position long until we get a cleaner move through the new balances. Now, I'm not counting any of this information yet because this is an all-time high and we don't have that information ahead of us. So if I'm trying to position based on where these balances are, I can see that there's a balance over here on this day that was created. And we also have a balance on this day. So it's the same day with two different balances and very thin volume, meaning that realistically, this is the last chance for these guys to hold out. They create a lot of heavy volume into the lows. This could be a tool of confirmation. A lot of heavy volume gets created here. A lot of heavy volume gets created here. So let's say I'm long 58, 55, right? My stop is going to be maybe about like 10 points, something like over here, because then we get too deep into the next auction. So I can get long based on this volume and this volume that gets created down here to see if we can get that next expansion to the upside. Alternatively, right, remember, we could look for some potential shorts which do pan out, but retrospectively, right, it would be better to be on the long because this is the last big balance that we have that's confirmed to kind of take us to the upside momentum move. So I'm just trying to follow along the direction based on these balances until we have a definitive close into a very large bounce to the downside, which would start at this area on the S&P. So realistically, what I'm trying to do is I'm trying to divide these markets up into massive balances on the 200-day and then drop down from there. Where can I find a balance on the weekly and areas and information that hasn't yet traded, right? Where can I then go into the individual profiles and find information that's going to suit me in terms of these levels, because they're all going to create confluence and coincide with what's going on here. And then I can take trades based on that without necessarily the need of order flow. If I wanted to get order flow as a confirmation tool, right? This is the kicker. This is what I talked about at the end. The first thing I would dive into is a delta profile because it has the most relation to what we've been talking about so far. So a delta profile, it's going to show me the clustering of delta positive or negative that can give me a better understanding of where to trade. If I have huge positively clustered delta into a low and price keeps rejecting it, that's where I want to trade, right? If I have huge negative delta clustered into a high and it keeps rejecting it, that's where I want to trade on the sell. Alternatively, if I have a lot of negative delta into a low and they keep rejecting it, that's where prices are getting trapped and I can take that position. So if I look at what's going on here, we had this huge chunk of aggressive buying into that 55 earlier on Sunday night. We come down into that area, right? This is another chunk that fails. So like, let's say I take a stop here as I'm trying to get long, that's fine. I'm trying to get long this chunk over here, right? We have confluence of a lot of selling getting trapped. So at that point, especially above this balance top, I am long. I'm positioned long to target some of these other areas and other balances that have been created on this day. So I do have a video out there about delta and delta profiles on our YouTube channel that you guys can go and check out for more information. But this is a very basic and general construct of a strategy and system that trades without order flow. I didn't use any order flow until the end. We looked at delta a bit, but even if we ignore that, we're looking at very specific areas based on the balances and volume, where volume is heavy and where it drops off. That can be maybe 20, 30, 50 points away on the S&P. So we're trading, right, very, very selectively from those levels that require larger stops. So this can be a strategy and a system that you can explore a little more, especially if you're kind of not getting the best of understandings when it comes to delta overall, or not even just delta for order flow overall. So if you guys enjoyed this, if you learned something, if this is something that you implement, drop a like, hit that subscribe button, and comment down below what you'd like to see next.